Agenda-setting insight with Reuters Breakingviews. Today's top stories: market share isn't the only concern with the Glencore-Xstrata merger, and regulators everywhere will be keen to poke into Glencore's secretive business. Just weeks into 2012, UBS warns of tricky Q1 and signals further cost-cutting may be needed. Let's talk about that as well. With me is Chris Hughes. Chris, Standard Life and Schroders, two of the big shareholders, already saying they're not that happy.
Yeah,
You know, before we get onto the regulation and the way this company is going to be picked apart, let's just talk about whether the deal will get the nod from these shareholders.
Well, as it stands, you've got a revolt already brewing among Xstrata shareholders saying, essentially, look, we don't like the terms, the premium is measly. They're saying, and when Glencore and Xstrata in their statement suggest that the premium is sort of 15% for Xstrata. Actually, when you adjust for the market and the value creation, and you look at the actual, core share ratio compared to where the companies were trading before this was announced, it's actually more like 8%.
Yeah.
So there's actually, but that means there's actually some room there to potentially sweeten the terms to actually lift the real premium that Glencore's paying for Xstrata that may actually overcome some of these objections. Now the other problem is that the board, as currently conceived, is a total mess. You've got effectively two CEOs, you've got two finance directors coming from each company, and you've got Sir John Bond coming from Xstrata. He's already looking quite weak because he's got shareholders in Xstrata saying that he's recommended a bum deal. So the other thing to tighten up would be the board, possibly to get in an outside, a proper strong outside chairman.
All right, so a proper board,
and one CEO.
Proper board, sweeter deal, premium at what? Sort of 10, 12%?
Well, I think coming in under 10 in real terms looks pretty bad. Okay. So let's just say right now, get the premium over 10, fix the board. The deal we think is probably salvageable if they cool down and they address these concerns, because the alternatives are pretty poor for both sides. Let's imagine the deal doesn't happen. Yep. You've got Xstrata going it alone with, the shareholders are very angry about what the board's done. Glencore clearly wants to do this deal. So there's a lot of forces that are going to keep these sides talking. And
then of course, the other story you've done, the regulatory side. But interesting in this piece by John Foley is the way he feels other big players in industry can try and block, or not necessarily block, but at least try and put a stick in the wheel.
Yeah, it's not clear actually that there is a really killer antitrust issue that will block this. I mean, assuming that they overcome the concerns about the terms that we've just discussed, it's not clear there's actually an antitrust issue that would kill the deal. But that doesn't mean that it's not going to be subject to an awful lot of scrutiny by regulators. Now, remember, Glencore, very profitable, but also pretty secretive business. And suddenly, there's an opportunity for regulators to really have a good poke around it and see how it works. And you can bet your bottom dollar that there'll be an awful lot of pressure put on regulators to do just that. Yep. So, look, the outcome may be some behavioural remedies here that actually aren't deal breakers and can be accommodated, but it just means that there'll be a long period of scrutiny and delay before the deal actually completes. So, look, we think, on balance, maybe the deal will probably actually happen in the end, but clearly a lot of issues to overcome right now.
Okay, quick word on UBS. They're warning of a tricky first quarter. Of course, they're doing this refocus on private banking, but Margaret Doyle says this. What's going on doesn't look good for the industry in general. The private banking side, right? Not investment banking.
I mean, not investment banking. I mean, look, clearly with UBS, it's still got a lot of UBS specific issues, but to be sounding so gloomy about the year and the first quarter, it's only, that's correct me if I'm wrong, it's still only the second week of February, isn't it? And they're already being gloomy about sort of, the outlook for the current trading period. I mean, it's astonishing, really. Now, look, a lot of that you have to say, well, look, UBS has got its own challenges, and new CEO Sergio Motti is really, really pushing hard on the rejig within UBS, of rebalancing towards private banking, shrinking headcount, shrinking assets in the investment bank. He's really going for it there, but rightly so, given the challenges. And it's dangerous to think these are just UBS issues. I mean, the pressures on UBS are magnified, but that pressure on headcount, that pressure on risk-weighted asset reduction investment banking is going to be across the board, and you can't ignore what UBS is saying about the weakness of the market currently.
Okay, Chris, thanks very much indeed. The US Breakingviews show is at 12:30 Eastern every day, 17:30 GMT. I'm Axel Threlfall. This is Reuters.